Philippines hit upper middle income status with an expansionary fiscal strategy meant to boost growth, create jobs, and lift more Filipinos out of poverty.
What if one of the world's next economic powerhouses isn't who most people expect? As of March 2026, the Philippines has officially crossed into upper middle income status, according to the World Bank. A milestone that didn't come easy. Just a year earlier, it missed the mark by a razor-thin $26. Now it's not just catching up, it's accelerating. With GNI per capita climbing past $4,496, the country's progress reflects more than short-term gains. It's the result of steady, inclusive growth that has quietly doubled the size of its economy roughly every 13.5 years since 2010. But here's the twist. Hitting this milestone isn't the finish line. It's the starting point for something bigger. The World Bank itself points out that while growth has been strong, the Philippines still faces both domestic and global shocks. That's why reforms, fiscal discipline, workforce development, and long-term investment are now front and center. In fact, an $800 million financing package has already been approved to strengthen resilience and prepare workers for higher quality jobs. And the momentum doesn't stop there. The International Monetary Fund projects that the country's GDP per capita will continue rising, from $4,320 in 2025 to $4,619 in 2026, while total GDP jumps to $533.9 billion. That's a significant leap in just 1 year. Zoom out, and the picture gets even more interesting. According to projections highlighted by Goldman Sachs, Southeast Asia is on the brink of a major economic shift, with the Philippines and Indonesia leading the charge. Indonesia could climb to become one of the world's top economies, reaching around $6.3 trillion. Meanwhile, the Philippines is projected to surge into second place in the region, potentially surpassing traditional heavyweights like Thailand and Singapore, with an economy valued near $2.5 trillion. Other regional players like Malaysia and Thailand are also expected to grow, but the spotlight is increasingly shifting. So, what's driving this rise? A powerful mix: strong consumer spending, a booming services sector, especially BPO, steady remittances from overseas workers, and a young, growing workforce entering the economy. Add consistent annual growth of 5 to 7%, and you get a country that's not just growing, but transforming. At this pace, the Philippines is on track to hit a $1 trillion economy by around 2033, more than doubling its size from just over a decade ago. That would position it as one of the largest emerging markets not just in Asia-Pacific, but globally. And the impact isn't just at the national level. Average income per person has surged, from under $1,000 in 2000 to about $3,500 by 2022, and could exceed $6,000 by 2030. That's a dramatic shift in living standards within a single generation. Of course, the path forward isn't guaranteed. Some analysts caution that if growth slows to around 6%, that $1 trillion milestone could slip into the early 2040s. Global economic uncertainty, infrastructure gaps, and policy execution will all play a role in shaping the outcome. That's why the government is doubling down on reforms, aimed at improving the investment climate, boosting productivity, and sustaining momentum. Still, one thing is becoming harder to ignore. The Philippines is no longer just an emerging economy, it's an emerging force. Once considered a slower-growing market in the 1980s and 1990s, it has transformed over the past 2 decades into one of the most dynamic economies in East Asia and the Pacific. And while it may not always dominate headlines, its trajectory tells a compelling story. One of steady growth, shifting momentum, and rising potential. So maybe the better question isn't if the Philippines will become a major economic player, but how far it can go from here. What if the next big economic story in Southeast Asia isn't just about growth, but about overtaking long-established leaders? In 2024, the Philippines hit a major milestone that flew under the radar. Its gross national income, GNI, surged to $518.1 billion, quietly surpassing Thailand and making it the second wealthiest nation in Southeast Asia by total national income, according to the World Bank. Only Indonesia remains ahead, with a commanding $1.39 trillion. Behind the Philippines now sit Thailand, Vietnam, Singapore, and Malaysia, a reshuffling that signals something bigger than a one-year jump. It signals momentum, and that momentum is expected to build. Over the next decade, the outlook for the Philippine economy is increasingly optimistic. Rising income per person, improving living standards, and steady development are all pointing in the same direction. A broader lift in quality of life and a meaningful reduction in extreme poverty. But what's really fueling this rise? A steady stream of remittances from overseas workers, a booming IT/BPO sector exporting services worldwide, and a tourism industry that's bouncing back with force. There's also a potential wild card: energy. The Philippines could benefit from major U.S. investments in oil and gas, especially through possible joint exploration projects within its exclusive economic zone in the South China Sea. Philippine firms are already looking for American partners, opening the door to multi-billion-dollar ventures that could reshape the country's energy landscape. Now zoom out to the global stage. According to projections from the Center for Economics and Business Research, the Philippines is expected to climb to the 23rd largest economy in the world by 2039, jumping 10 spots from its 2024 ranking. And here's the headline: only 3 Southeast Asian countries are expected to make the global top 30 by then: Indonesia, 10th, the Philippines, 23rd, and Vietnam, 25th. That's elite company. Even more striking, this trajectory suggests the Philippines could surpass both Thailand and Singapore in the coming years, solidifying its position as the region's second-largest economy. The International Monetary Fund backs up that trend. Its projections show the Philippine economy reaching $746.5 billion by 2030, overtaking Singapore at $721.3 billion and Thailand at $654.1 billion. And the climb doesn't stop there. By 2039, the Philippines could even edge past advanced economies like Switzerland and Taiwan in global rankings. Meanwhile, the global heavyweights, like the United States, China, and India, will continue to dominate the top spots, with India expected to rise even further, overtaking major economies like Germany and Japan. All of this points to a broader shift in the global economic balance. And the Philippines is right in the middle of it. With strong medium-term growth forecasts, projections from S&P Global Market Intelligence suggest the country could hit the $1 trillion GDP mark as early as 2033. That would transform it into one of the largest emerging markets, not just in Asia-Pacific, but worldwide. So, what we're seeing isn't just steady growth, it's acceleration, it's repositioning. It's a country moving from the sidelines into the spotlight. And if current trends hold, the real story isn't just that the Philippines is rising, it's how quickly it's closing the gap. Here's what makes the story even more compelling. The rise isn't just happening at the national level, it's showing up in everyday life. Over the past 2 decades, income per person in the Philippines has surged, from under $1,000 in 2000 to about $3,500 by 2022. And if current trends hold, it's expected to climb past $6,000 by 2030. That's not just growth, that's transformation. At the same time, the overall economy is on track to double, jumping from roughly $400 billion in 2022 to around $800 billion by 2030. A big reason? Rising consumer spending, powered by a growing middle class and stronger incomes in urban areas. And then comes the next big milestone. By around 2033, the Philippines is projected to break into the trillion-dollar club in the Asia-Pacific, joining economic heavyweights like China, Japan, India, South Korea, Australia, Taiwan, and Indonesia. That's a major shift, from emerging player to regional heavyweight. Looking even further ahead, projections from Capital Economics suggest the Philippines could become the world's 18th largest economy by 2050, if it can tackle one key challenge: infrastructure. Because growth at this scale needs roads, railways, ports, and power to keep up. If it succeeds, the numbers get even more striking. GDP could climb to nearly $4.9 trillion, with income per person reaching over $33,000. And that's where global investors are starting to pay attention. The Philippines is positioning itself as one of Asia's next major investment hubs, backed by ongoing reforms and steady growth, even in a challenging global environment. In fact, the country is targeting around $100 billion in investment deals over the next decade, particularly from the United States and Japan. These investments span critical sectors: energy, semiconductors, infrastructure, the digital economy. Japan, in particular, has been a long-time partner, funding massive infrastructure projects like the Metro Manila Subway and the North-South Commuter Railway. Together, those projects alone are worth over $25 billion, with Tokyo financing the majority. Meanwhile, the US is doubling down on high-growth sectors like semiconductors and ITBPO, industries that already contribute more than 10% of the Philippine economy. There's even movement in next-generation energy. A Seattle-based firm, Ultra Safe Nuclear Corporation, is exploring the development of small modular nuclear reactors, potentially reshaping the country's energy future. And beyond that, there's growing interest in joint energy exploration within the Philippine Exclusive Zone in the South China Sea, a move that could unlock new resources while deepening international partnerships. All of this points to something bigger. The Philippines isn't just growing. It's becoming a magnet. With global companies reassessing supply chains and some shifting operations away from China due to rising geopolitical tensions, the Philippines has a real opportunity to capture that momentum, especially from US and Japanese firms looking for stable, high-growth alternatives. So, the question isn't just whether the Philippines will keep rising. It's whether it can fully seize this moment, turning strong growth into lasting transformation and potential into long-term prosperity. What if the Philippines isn't just growing fast, but positioning itself to become one of Asia's most important investment hubs? That possibility is becoming more real as the Philippines strengthens its ties with two major economic powers, the United States and Japan. And this isn't just about diplomacy, it's about opportunity. Washington is actively pushing a strategy known as friendshoring, shifting key industries like semiconductors, digital trade, and green energy into trusted partner countries. That opens the door for the Philippines to capture a share of a massive market, especially in semiconductors, which are already valued at around $80 billion across Southeast Asia. And here's why that matters. Semiconductors power everything: cars, defense systems, digital infrastructure. They're not just part of the future. They are the future. At the same time, the Philippines brings something powerful to the table. It's one of the most dynamic economies in the East Asia-Pacific region, driven by rapid urbanization, a rising middle class, and a young growing population. That energy fuels strong consumer demand, backed by a vibrant labor market and steady inflows of money from overseas workers. And those remittances, they're massive. According to the World Bank, the Philippines received about $40 billion in remittances in 2025, making it the fourth largest recipient in the world, behind India, Mexico, and China, and ahead of Pakistan. But it's not just the size of those remittances, it's the shift behind them. Over time, Filipino workers abroad have moved from lower-skilled jobs into more professional, higher-paying roles. That means more income flowing back home, and more spending power fueling the domestic economy. And then there's the services sector, the real engine behind the Philippines' rise. Business process outsourcing, real estate, tourism, finance, and insurance. These industries are not just growing, they're thriving. The country is steadily transitioning from an agriculture-based economy into one powered by services and manufacturing. And beyond that, it's exporting services to the world, both digitally and through its global workforce. Still, there's another layer to this story. Despite strong performance, analysts say there's even more room to grow, especially in moving up the value chain and playing a bigger role in global production networks. That's exactly where the opportunity lies. By doubling down on its strengths, the Philippines is aiming to become a central hub for services trade, not just in Southeast Asia, but across the entire Asia-Pacific region. And with a more stable, predictable, and competitive investment environment taking shape, the country is becoming harder for global investors to ignore. So, this isn't just about steady growth anymore. It's about positioning, it's about timing, and it's about a country stepping into a moment where global shifts and local strengths are finally lining up.